What's going on, everybody? Welcome back to the channel. This is Revolutionary Road coming back at you with another stock pick of the week. We haven't done one of these videos in a long time, so I figured I would come back at you with some stock picks, but I wanted to go over some of my stock picks from the last year and just kind of show how they've turned out. Now, none of these stock picks were like, hey, go buy this right now. These are all things that companies that I just were like, hey, this is an interesting company. Let's go over the financials. Let's go over the kind of idea, the industry. Let's see how these guys want to make money, what their idea is. Can these a lot of these companies that go over are penny stocks. So they're not necessarily great companies unless obviously when I go over Tesla or Nikola or Wader or some of the swing trades that I said I was going into, like CTC and Suncor, and these are obviously better companies, but some of these other ones are penny stocks, and they can be hit or miss, right? Like almost any of the cannabis stocks that I recommended way back, so like Organigram or Zenabis or Chiron, a lot of these companies haven't done that well. They're hit or miss. They're very volatile. They've gone up, had huge swings. They've gone from like $1 to $3, and then they've come back down. Some of them, have gone up to $1.50, and they're back down to 50 cents, and then now they're back down to like 20 cents. Some of them even down to below 10 cents. So those are very risky plays. And a lot of times you're looking at it from two perspectives, right? You're either going in for a long-term hold, or you're trying to swing trade for short-term catching momentum on stocks that probably are catching news or that are in momentum kind of plays, like sympathy plays, sort of like the Tesla EV market, all of those kind of stocks. So a couple of the ones that I wanted to touch on that I think were some of my better, some of the better companies that I talked about last year. One of them being Valens, and obviously anybody can go back and say, hey, I picked these companies, they won. These other companies I picked didn't do so well. It's not that I still don't believe in a lot of those companies. It's just obviously people want to see results. They don't want to look at a stock and be like, oh, you recommended this thing at like 40 cents, now it's at 10 cents, and I didn't recommend it to buy. All I'm saying is that these companies are ones you should keep on your radar. You should look into them if you're seeing them at levels that you think are because they're very volatile. So if you're buy at the bottom and you sell at the top, you can catch nice moves on these stocks. So they're ones that you shouldn't necessarily be buying just randomly without a plan. You should definitely have a plan with these. Be very risk averse, where you're looking to get in at support levels and get out if these break. So like you can see here over the last year, and I recommended this stock, Valens Growworks, back 8 months ago. So right here, Valens Growworks company. So I brought I talked about them in this video, and I went over how they plan to make money, what their kind of overall idea was for how they were going to be successful in the industry. And Valens is a company that I highlighted is different. That's a hilarious picture of me there. But Valens is a company that I highlighted mainly because when you look at the company, what their ideas are different from all of the other companies in the industry. Now there's a few other companies that they're in the same boat, but when you look at them comparatively, Valens is the defunct leader, the de facto king of concentrates. I will put it that way, because what they do is they're focused specifically on the concentrates aspect. They're not focusing on growing cannabis. They're not focusing on cultivation. They're not focusing on retail cannabis sales. They're focusing specifically on concentrates. So what that means is extraction. So their ideas are basically shown here on this chart. Sorry, my face is kind of blocking half of it, but dried cannabis is taken in its form, natural form. You take it, you then extract it with butane or some sort of fire or very, very high heat, so you can basically turn it into a liquid form, oil, and then take that crude oil and what they say here, winterize it, which is basically turn it into a solvent, so then it can be turned into any other form of smokable or ingestible products. So through concentrates, you can then make, just with that oil, you can turn it into edibles, you can turn it into concentrates, like vape cartridges, or you can just turn it into edibles like chocolate bars and gummies or whatever, and beverages, which is the other big thing that a lot of people are excited for. So this is where the industry is going. This is a company that is looking to benefit off of something where they get paid no matter what. The biggest thing about this company is they get paid no matter what. So with Valens, they're not focusing on, I grow this much and my supply and demand, I need to have this much supply and I need to meet, be able to not have a crap load of cannabis sitting in the warehouse that I can't sell, that's just stockpiling, and then I have to sell for cheaper than I want to sell because I have too much and I can't get rid of it fast enough. So that's the problem in the cannabis industry with a lot of these big retailers. But when you look at a company like Valens, their idea is, hey, I'll take some of that product off your hands, I'll extract it into concentrates, you can pay me to extract it, and then I'll give it back to you, or I'll pay you a cheap price for that cannabis, and then I will extract it myself and sell it as a white label product, which basically means it's just they put it in a generic tube and they send it off to another company and they slap their label on it and they sell it to you in the retail market under their sales license. And this happens quite a lot in the cannabis industry. So, and it happens in every industry. It's not just the cannabis industry, but this is, how corporations work is, if they need to find a product that they want to market, but they don't have necessarily the inventory on hand, they will go source that inventory from another company and then basically slap their label on it. And that's how it goes. So that's what's happening with a lot of the companies that are working with Valens, or what Valens will do with a lot of these companies that are looking to get rid of their cheap cannabis that they have sitting on the shelf forever, and these guys can just take it, extract it, so they don't really have to worry about a lot of the things like mold or bud rot, or a lot of different things that can get into the cannabis over time, or just from sitting around, things that can happen if it's not properly stored, which sometimes it isn't. But depending on the company, either way, when they extract it a lot of times and irradiate it, which they will do in most cases, which I don't necessarily agree with, but it is what it is, they will then take that product and sell it to the market. So this is Valens and how they plan to make money. So when I was talking about them, it was back in 8 months ago. So 8 months from now is basically around this area here. So in May or June, around this area here. Either way, in the about $2 range. So I remember I saw them dip down here. I think it was like right in this area, because I saw them dip down to like 192, and I was like, hey, that looks like a decent area to buy. And a couple weeks ago, or even like last week, I think I was looking at this thing like, man, it's at $1.65. That's a good level to buy. I was thinking of it again, because anywhere below $2 to me is and I'm not giving ideas and saying, hey, go buy this, but you should always do your own research and have your own game plan for how you want to trade and get into these trades. Don't necessarily just listen and follow what I'm doing, but understand that this company is probably a long-term play no matter what. So for me, it's getting in at the best price you can and holding until you get significant profits. So with this, you see a bottoming around 150. So the 150 is really the bottom support level, where $2 is the other kind of support. So if it bounces below any of these levels, I might think of getting out and maybe reloading. If it bounces below 2, especially if you get in up here, I might wait for another pullback. But either way, it's still a decent level as you look back. Over the year, it's gone up almost to 450. So that's almost 100% gain from current levels. Well, close to it. So 80 to 90% gain from the current level. So that's a decent improvement. And what we're gonna look for here, and you can see it was up to almost $12 back in 2010. But currently, what we're looking for here is a simple bounce up to these levels that we've seen earlier this year. So a retest here of 450 from these levels of say $2, and we're going to bounce to that range. So I'm waiting for a pullback to 2, as close to 2 as I can get in, and hopefully in the 210s, maybe even 220s, I'll try to get in, and then I'll hold for a move above 4, a retest of 450, and then maybe get out half and hold and see what happens. But that'll be my play here on Valens. And no, like I said, that I called them out 8 months ago. So if you would have bought anywhere in these levels, basically, or even bought, when I was saying to buy here, and then held through this dip, you could have sold up here around $3, right? And that would have been an almost 50-60% gain on your money right there. So and then if you wouldn't have sold, obviously you would have lost. Say if you would have seen my video say around this area and you would have bought, you would have lost. But that's the thing about these stocks, is a lot of times they're extremely volatile, so you have to be aware of you don't just want to jump in and say, oh, I'm going to get in. What you want to do is you want to look at these stocks, you want to see where they're trading around, where's their support and resistance, and where can I get in, and look at the overall industry, because the cannabis industry follows closely with each other. This stock, when the cannabis industry started sparking the last couple of weeks because of Biden presidency, you saw an increase in volume in Valens. But my idea, at least, is that Valens has different catalysts than the cannabis industry, because they're going to make money no matter what. Their revenues are solid no matter what, and that's kind of the idea with the way that their business is focused, right? So I won't go over their financials and stuff. I went over that in the other video earlier. If you want to go over that, if you want to go look at that, obviously it's changed a little bit, but you can look at the recent updates. It's pretty good. They've had some pretty good numbers, which is another reason why they've spiked. But the other thing is that these are all growth plays, like I said, long-term plays. So that's my kind of idea for what I'm looking at with these. Another stock that I picked around the same time that I showed you Valens was a stock called American Hotel Income Properties, and it's a REIT, so it's a real estate investment trust in the U.S. So what they do is they and you can see when I was recommending it, it was at $2.15. So this company, what they do is they focus on hotels, but what they focus mainly on is areas that are not extremely high traffic. So they focus on kind of cheaper areas where they can buy. So like here you see kind of North Dakota, Minnesota, St. Paul, Kalamazoo, Missouri. So places, and a lot of these are like close to like airports, and but they're not necessarily the most high traffic. They're not in New York City, they're not in Los Angeles, they're not in Miami. I think they have some in Florida, but they're more in kind of these Midwest, kind of central, southwest, kind of northeast, but in these kind of mid-traffic, what they would call mid-traffic, not high traffic, but mid-traffic areas where you have steady but not extreme volume, but at the same time you have cheaper rent and cheaper properties, which gives you the ability to basically make your money back faster and upgrade. As you've seen as I went through that, they have spent their time flipping. So what they'll do is they'll buy some hotels in a cheap area until they've made enough money where they can flip to a better area, and then they'll renovate their existing hotels to make them in the ones that are in better locations, the ones where they're like, hey, these ones are doing really well. They'll go over their portfolio every year and they'll be like, all right, these hotels are doing really well. I'm going to renovate these, and then we're going to cut any ones that are not doing well. So the ones that are kind of struggling, they'll just get rid of them. They'll just offload them, sell them at for maybe a small loss, but they'll get rid of them so then they can focus their assets on the properties that are doing better, and then those will generate more income, because as you see here, they'll come in and they'll renovate those properties like they did here in their Embassy Suites hotel in Columbus, Dublin, Ohio. So that's their way of kind of growing their business, by focusing on these mid-range areas where they can generate successful, good profits, not insane profits, but steady, consistent profits, and focus on those properties that are doing extremely well, cut the ones that aren't, and constantly rinse and repeat. And so that's American Hotel Income Properties Hot U. That was when I recommended them back in May, around the same time, May, June, where I recommended the Valens Grow Works. And so as you can see here, from 2020, from the drop in March, and when I recommended them in May, around 215, so basically around this area here, you had one bounce where you could have profited up to 360, came down, could have bought again at 250, 225, around the 215 mark again, and held, and now you would have sold around 4 or held and been up almost 50% on your investment. So that's those are some of the good ones, and obviously if you want to go over Canadian Tire, Suncor, I bought Canadian Tire. I recommended it. I told you when I got it. Got in it at $100 back in this around the same time that I was recommending the others. So I got in at $100 exactly. So it was probably right here, right around this area here. Because after I bought it, it never touched below 100 again. So I bought it right in this area here. Yeah, and I've been holding it ever since. So that's almost 100% gain on Canadian Tire. And then Suncor has basically... Oh, and sorry for that, guys. I've been kind of trying this new thing with my webcam. So it's harder for me. I don't know if it's not probably working now, but it's harder for me with my webcam because it doesn't stick properly up on top, so I have to usually put it like down here, but then it doesn't look as good because I have to constantly look down at it, and I think that is distracting. So I prefer it to be up above my computer, but you guys can let me know what you guys think. But anyway, so it looks alright there. But anyway, yeah, so Suncor was the other play that I had kind of given you guys at the same time that I did this play. Hopefully it doesn't knock it off again. Sorry about the camera. It's kind of annoying that it does that. But anyway, so Suncor was the other one that I gave you, and if you look here, it's basically done. You know, it basically has gone down, but it hasn't really done much. So I bought it around the same time when I was recommending those. So it was around 23. So around this area here. So, you know, then obviously it dipped all the way down to 15. I was thinking of buying more, but I ended up not doing it and just kind of waited. So now it's came all the way back up to my basically my entry price. You know, Suncor, it's Petro Canada. It's a long-term hold. For me, it was always a long-term hold. It's a dividend stock, so they pay dividends. It's one of those ones that you're not necessarily, you know, I'm not buying it just to catch a quick 10% and be out. I'm buying it to hold for the long term, to catch dividends and to kind of build my position. So I should have, in hindsight, I should have bought at 15. I wasn't expecting it to bounce back as quick. I wasn't expecting it to dip to 15 like it did though. But either way, my position's in at 23. And like I said, it was up at 56 at one point. So 23 is still got, you know, upside of quite a bit on that. That name. So one of the things too is funny, when you start looking at some of these headlines here, it gets kind of interesting in a lot of these companies. So it's a good way to kind of see the sentiment from a lot of but obviously these are just random, you know, retail traders. They're not actual, like, you know, any experienced, or shouldn't listen to any. And this is why you should never listen to anybody, you know, on YouTube, anybody on, well, not necessarily on YouTube, but like, it's not that you shouldn't listen to people, it's that you should listen to them about their idea, look at their strategy and think, is this a good strategy? Will this work? Can I understand this? You know, and if it doesn't make sense to you, and it looks stupid, and you're like, man, this doesn't even, why would you do this? You know, like even Suncor, you could have been like when I bought this, you could have been like, dude, like, oil's going down, why are you buying Suncor? You know what I mean? It's like, it's one of those things where you're just sitting there like, well, I'm buying it because it's cheap and I want to hold, and I'm not buying it because I want oil to do well. Trust me, I'm not a big oil fan. I'm not, you know, looking to just get into oil and hold oil forever. But I am interested in catching the next, maybe 5-10 years of what's going to happen. Because yeah, everybody's into EV, and EV is going to be great, and Tesla's going to take over the world, or whatever. But in the next decade, oil is going nowhere. Oil's not going to, we're not going to see a massive oil glut. Oil's going to come back. Suncor's probably going to go back to 50. It's just, when you go around any Canadian city, do you see Petro-Canada's closing? Do you see gas stations going out of business? No. Like, you see everybody filling up. You see Petro-Canada making money. Gas prices are back to what it was before the pandemic. So at the same time, you're looking at an industry that, really is still, like, people need gas. You need gas. People drive. People are going to work. People are getting, even if you're not going to work, you still need gas. It's still an industry that makes money. It is always going to make money because people are going to need to travel. As long as there are powered cars on the road, gas companies are going to make money. And a lot of these companies are going like Suncor. Like, if you watch my video, a lot of these companies are going clean. Like, Suncor is putting a lot of money into clean energy. So they're looking at the future. So it's not necessarily just a oil play either. But those are my thoughts on Suncor. And those are my thoughts on some of those plays. Like I said, these are some of my plays that did well. Some of my plays that didn't do well, it's basically any of the cannabis names. Pick your poison. Or even like some of the other ones like Zoomer Media that I talked about. Although you can see like Zoomer's back up to 13, right? So this is almost back to the levels where I was buying it, right? Where I was recommending it again. And, obviously there was a nasty dip since I did recommend it, but so I think I was in at like 14 or something, and I was recommending it back then because their fundamentals in their business is interesting. Like, they're gonna be a growing business, and what they're doing, they're growing. Everything they've all the news that I've seen about them has been positive, and they're growing. They're not a huge company, but they're when they're trading at 14 cents, they don't have to be. 13 cents, they don't have to be. So these are penny stocks that I gave, and obviously if you invested where I did at 14, you lost half your money. And if you didn't hold back till it came back up here, and are willing to get out here, like I was thinking, if it comes back up, maybe I'll get out. But I'm only in for like a couple $100 because I was in for like more, but I sold as it popped. So, as I got in at 14, it popped up to like 15, 16. I got out for half, and then I held half, and then it came back down, and I was thinking of selling it, but then I held, which I probably shouldn't have, but now it's back up, and I'm probably going to sell. But obviously you're looking at that, dollar, if it can retrace back up to these levels, then you're like, whoo, but this is, not even probably the same company, or when it was, a different company. But either way, this company's got a lot of good things going for it, but it is a cheap stock, so it's not one of those that you want to just go jump into and hold forever, right? And Zenabis is the same thing, right? A lot of these stocks that I recommended back then didn't do so well. So you can't, look at the good without the bad. You need to show both, and you need to also look at your strategies, say how they worked, but a lot of these times you also need to think about how your past performance has done and how you've kind of handled those trades when you're playing out your strategy. Because a lot of these trades, when I was looking at them, it's just, the market had crashed basically in March, and all of them were undersold or underbought. So a lot of these stocks, they'll kind of have cycles where they'll go through the underbought cycle where they'll be really cheap, and then they'll shoot back up a couple dollars, and then they'll get to overbought at 4 or something, like this company, American Hotel Income Properties. They go from $2 to $4, and they're back to 2, and then they go back up to 4. And if you just kind of target that range, you can have success. Now, I'm not saying that that's necessarily going to lead to success. All I'm saying is that in my strategy, it would be to buy at 2. If it breaks below 2 with any seriousness, say below 190, I'm out, and then maybe look to buy if it goes down to 150 or something and hold at 150. But if I get in at 2, I'm looking to sell half at 3 and sell the other half at 4, and then get back in on a dip. And that's how you should be looking at these. None of these should be buy and hold forever, unless, because a lot of these are not dividend plays like Suncor is. Suncor is a buy and hold forever. Canadian Tire is a dividend play. They're a buy and hold forever. These are stable pillars of the Canadian economy. So you can't, invest without thinking about those companies like TD, or, companies like CIBC, these banks, or companies like Canadian Railroads, or any of these big industry players are good investments, for the sense that as long as you get in at a decent price, you're probably going to get good dividends, and then you can just kind of, live off of that. And if the stock price goes up, then you're it's kind of a win-win. So that's kind of the double way of looking at it, right? You're either choosing whether you're going with these high risk, cheap stocks where you can have huge upside, or you're going with these really low risk, low gain, depending on how much you have to invest. Obviously, if you have 100,000, you can make a lot more in dividends investing in Canadian Tire and Suncor than if you only have 10,000. So they might be a better just hold long-term investments and then just collect dividends. If you want that to just sit there, you can just collect dividends, basically just like a bank account. A lot of these stocks like TD trains in like a $10 range, and as long as you don't have any crazy, banks are also risky too, because you can have a huge crash overnight from some international market news or something, whereas some of these other companies will still have, like oil for instance, will still need to be relied on. So that's that. Those are those picks that I had from before. So if you stay tuned, I'm going to go over a few of my stock picks that I want to go over for this week, and for kind of my plan for the future in the next few months. I'm going to be going back to work for 4 days a week, probably starting in a couple weeks. So I was only off for a couple months for finishing my book, so I'm almost done that, and once I get that published, it'll basically be back to work, and then see what happens in the future. But that's why I want to kind of get back into swing trading as well, and get back into more things where I don't have to focus so much on day trading. Day trading is really just something I do because I want to learn it, and I have been learning, and that's kind of my focus on why I put it on YouTube. It's not necessarily because I want to show people, you're gonna make a lot of money following this strategy. Go buy my strategy. Go buy my book. Here's my ebook. Go buy my course. I'm not focused on that. I'm focused on trying to learn and teach you guys how I'm learning, and the struggles, but also the successes, and how that makes me feel, and how I'm doing on the journey, and how I build my strategies, and kind of why I do the things I do. And this is why I make videos like this one I'm making now, and the video like this one here you see. It's all part of the strategy building, and building confidence, and kind of rinse and repeat, do the same things, and learn these levels of support and resistance. Obviously, if you see here, this is a big level of support. Obviously 250 is huge, and you see that here. Like, why would it trade there forever if it wasn't a level of support? And you see that here, when it breaks it above it, comes back to it, holds, breaks it above it. Now it's holding here. Maybe we're finding support here, and maybe we'll have it move higher. But if not, we'll have it move lower, and then we can add, right? We can look to add on these positions, right? But anyway, I will be coming back at you with another video soon, so feel free to stay tuned, and hope you guys have a great day. Obviously, the markets are closed today in the US, but we still have the Canadian markets open, so that's why we're going to go over some Canadian plays, and might go over a few American stocks as well, just in case you want to keep some of those in your portfolio. I have focused a lot of times on Canadian stocks, but I want to kind of branch out and kind of do a little bit of both. So we're going to come at you with that soon, so stay tuned, and we will be back at you with another video. Have a great day, everybody, and hope you're doing well trading.